Turning our attention now to the surging oil and energy that are contributing to all of this. The sector continuing to dominate the market. Look at WTI crude climbing back above $122 a barrel now. This is a 3% rally that's extended just the past few hours. We've got nat gas, highest levels since 2008. 15 stocks in the energy ETF are hitting an all-time high today. Exxon, the biggest of them, trading at more than $105 a share now. Let's bring in Rob Thummel. He's senior portfolio manager at Tortoise Capital. Rob, like we had emphasized previously, there had been this discount for a lot of these major producers like Exxon. Now we're seeing the prices finally catch back up to 2014. Where do we go from here?
Well, you still have a lot of cash in this sector, Kelly, and that's what really investors are looking for. They're looking for high free cash flow yields, high dividend yields. And if you just look across the energy sector, led by Exxon, you've got double-digit free cash flow yields that are double the free cash flow yield of the S&P 500. You've got a dividend yield. In Exxon's case, that's double the S&P 500 dividend yield. Other energy stocks are 4 and 5 times higher from a dividend yield perspective. So the sector's delivering on a lot of cash, and that's what investors are looking for right now, and I don't see that changing.
There was a note over the weekend where the analyst said, okay, we missed the first 50% in energy, but here's where we're going for the next 50%. Is there going to be a next 50%, and where do you think investors can find it?
Yeah, so if you look at where the energy sector is going from here, a couple really big mega themes. First of all, energy security, right? All right. I mean, energy security really since February 24th has become really heightened and is really important. And so the energy sector, in particular, the U.S. energy sector, can really provide energy security to not only the U.S., but the rest of the world. Also, decarbonization. That's another classic example, right? The world needs to decarbonize. We need to have less carbon. And the energy sector is actually not only embraced, but is participating in this decarbonization trend, and they're just getting started. So the sector not only can provide some really good fundamental backdrop led by high cash flow, but also some of these technical factors and things that our investors are looking for in the future, like decarbonization, and the impact that the sector can have is going to really play out over the next several years. So the sector could just continue to rise as a result of that.
All right. So you have some particular ideas like EQT we've talked about before, the nat gas producer, the refiner, yep. Valero. You still like Exxon and Chevron. You say the most underappreciated stock is still Cheniere. Why?
Well, so you think about what Cheniere is doing. Cheniere is the largest exporter of liquefied natural gas in the U.S. If you think about the impact that Cheniere's had globally, Europe was in a lot of trouble to start the year because they were going to run out of natural gas potentially. 75–80% of Cheniere's exports have gone to Europe and helped refill the European natural gas storage, which is going to help really brace Europe to get through next winter in regards to natural gas, and ultimately will result in lower natural gas prices. But fundamentally, what I like about Cheniere is, and the market's not appreciating this, is the company itself can generate a significant amount of free cash flow year after year after year after year, and that free cash flow yield is double digits. And that type of double-digit free cash flow yield for that duration should not just be priced at what the current Cheniere price is. It should be significantly higher than that, in our opinion.
All right. Well, there you go. It is in the green today. So is Valero, while some of the others surprisingly are in the red despite this pop in oil. Rob, we'll leave it there for now. We'll check back in soon.